All right, pretty interesting day. Now, why do I say that? Well, we got the CPI numbers today, and funny enough, those CPI numbers were some of the craziest that we've seen. And with that, you would expect for the metals to rally. Well, this is what happened to the metals after we got those CPI numbers. Let me just scroll up here. We just saw them tanking, and obviously, that's not something that you would expect. However, I want to actually bring some clarity to the situation. But first, here we have from the original, one of the first people who kicked off Wall Street Silver, the Happy Hawaiian. This person made a post and said CPI blows out expectations, 0.8% month over month versus 0.2% expected, 10% annualized rate. Year over, it's at 4.2% core, 3.0%. Somehow the dollar bids and metals sell off. What world do we live in? Now, I will explain this based off of secondhand news that I have received from, some courses that I've taken. And generally, this is what I've learned. Again, this is secondhand news. I've never worked on Wall Street, but it makes pretty decent sense. So generally, during times where the VIX rises pretty mightily, as we've seen over the last couple of days, what you will see some traders on Wall Street do is cut some of their portfolio positions, not all of it, but cut some of it, take some of that capital that they've then raised from cutting some of those positions. And because some of these traders receive performance, bumps in pay, they will go and do some shorter term trades during these times of high volatility. And that's what the VIX represents. When you see the VIX go up, what you then see are people raising cash so they can then do some shorter term trades with that cash. Then when you see the VIX come down, you will then start to see some of these traders build their portfolios back up and do less of those shorter term trades. And they aren't raising cash anymore. They're transferring that cash back into positions of their portfolio. Hence, it helps to bring the VIX down. So with that, why did we see this crazy amount of volatility? Well, and again, this is why yesterday I said you have to pay attention to some other markets except for or in addition to metals as well. But with tech and the high growth names, for the past few months, we've been seeing traders rotate out of those, going into cyclicals and other plays, reflation trades, so on and so forth. So when you see the CPI rise this much, beating expectations, what that says about those high growth tech stocks is, hey, we need to taper a bit of your valuations back down, bring them back down to reality. And with that, you're going to start seeing traders adjust by bringing those valuations down, getting out of some of their plays, and rotating into other plays. Now, in that rotation, again, during times of high volatility, with traders raising cash, you're going to see some of those shorter term trades happen, so on and so forth. So the CPI, though you would think it would be beneficial on the day that it's released, be beneficial for metals, actually, it was better for cash because you have traders on Wall Street raising that cash, getting out of some of those high growth names, for example, and either rotating into cyclicals, but in the meantime, doing some of those shorter term trades with that cash that they had then raised. So guys, I just wanted to give a quick explanation as to why we saw this. It's nothing that will be long term. This is very short term stuff here. Expect gold and silver prices to continue rising throughout the year. This is, again, all short term. But guys, let me know what you think. I hope that brought some solace to you. Let me know what you think in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for gold and silver today.com.